Broadcasting from the Business RadioX studios in Atlanta, it's time for Dental Law Radio. Dental Law Radio is brought to you by Oberman Law Firm, a leading dental-centric law firm serving dental clients on a local, regional, and national basis. Now, here's your host, Stuart Oberman.
Welcome, ladies and gentlemen, to Dental Law Radio. I have the absolute honor of having Danielle McBride, partner at Oberman Law Firm, joining us today. And we've got a great topic. But first, I want to get to talk to Danielle a little bit about what she does at Oberman Law Firm, which is amazing. And that's why that I want to really have her on today's podcast. So Danielle's been practicing for about 21 years, focuses on healthcare and on a regional, national basis. And Danielle handles a lot of dental transitions, healthcare transitions, employment law, and tax. So that's going to be one of our topics today, and also practice valuations. And Danielle has her law degree from Ohio Northern University and a master's in tax from Case Western Reserve University. And there's no better topic today in today's world. If you're a dental practice owner, that tax. So Danielle, I want you to talk a little bit today about tax update for 2021 and beyond. I know that you are in tune immensely as to what's going on with that. You have an enormous amount of resources, and we are extraordinarily happy to have you as a member of the firm. And I know we rely on you a lot for a lot of complex stuff. So it is my absolute pleasure to have you on today. So tax. Tell us what's going on. Welcome.
Tax. Well, thanks, Stuart, for the introduction. And I'm really happy to be here today and talk about tax, which to most people sounds like a boring topic, but it really plays a huge role in all of these transitions that we do. And, part of what we do as a dental specific lawyer is to make sure that we keep up to date on things that affect our clients in particular. And these tax laws, there's a lot of stuff that does not affect clients in our business, but the things that do are important for them to learn. And we've got two real big bills, two bills that have gone through the House. One passed into law. We've got the Infrastructure Investment and Jobs Act, which was actually passed and signed into law by the president November 15th. That had some major items. It's the largest infrastructure act in decades. It's got major items for disaster relief, capital contributions to public utilities, excise taxes, cryptocurrency provisions. And there's one item in particular that's, that has an impact on our dental clients. And that's this employee retention tax credit, which was originally put into place under the CARES Act to allow those practices that had a decrease in revenues be able to claim some tax credits. So the Infrastructure Investment Jobs Act actually ended that retroactively to September 30th of 2021. When it was originally put in place, it was supposed to, and it was extended through the end of 2021. So now we've lost the fourth quarter. That also keys up a few problems because they did this so late that there were some employers who had already withheld deposits, thinking that they were going to get this credit. And so those there's actually a new notice that came out on that. So this earned income employee retention tax credit is 70% of qualified wages paid in a calendar quarter before now September 30th of 2021. The only exception to the September 30, 2021 is a recovery startup business. And that's someone who probably wasn't in business before the March 2020 COVID shutdown. So those clients have the ability to maybe qualify for quarter four when they wouldn't have before this Infrastructure Act was signed into law.
I got one question. What kind of notice was sent out? What kind of notice? When you say notice,
it's an IRS notice. So the IRS notice, it's Notice 2021-65 issued by the IRS, and that's to provide guidance on the rollback of the employee retention tax credit, except for those recovery startups, like I mentioned. And so for those employers that got an advance on the credit, the IRS isn't making you repay that money until the due date of the fourth quarter return, which is January 31st of 2022. They're also including
can our
a
doctors
waiver.
get a copy of that from us?
Sure.
Because I know
Yeah.
I know we get these questions from CPAs.
Yeah, we have access to it. We can give it if there are dental CPAs or clients who want a copy of this notice. We have access to tax research. We can easily provide a copy of that notice. Notice also allows for some waiver of failure deposit penalties if you retain those deposits before December 20th. Of 2021. So important piece of information for all those dental advisors to have in counseling their clients for this last quarter of the year.
Well, I know when you say, so how do our clients or anyone who's listening today get that information? They just email to you, and then you can just send out.
Sure, they can email our office.
Okay.
They can email me at our office. It's just Danielle at obermanlaw.com, or they can call and ask for me at our office phone number 770-886-2400.
Now, there's a lot of acronyms thrown around through all this legislature stuff that's going on now, mm-hmm. and probably into 2022. So when our doctors hear the acronym ERC, what does that stand for?
Employee Retention Credit.
And that's what
it's sometimes
about.
Also referred to as ERTC, Employee Retention Tax Credit.
Got it. Okay. Now, one of the things we get questions on, how does the Back Better Act affect my practice? And I know you are on the forefront of that.
The Employee Retention Tax Credit was part of the Infrastructure Act. The second piece of legislation is the Build Back Better Act, and that has not been signed into law yet. It is passed the House, and there is a Senate version. And that Senate version was passed, or the act was passed by the House on November 19th. It's been with the Senate. The CBO, or the Congressional Budget Office, has given some statistics to the senators on how much this is going to cost, what they what's going into the bill, how are we paying for these things, tax increases and spending, all of that. There's a December 11th, a draft legislative text was released by the Senate Finance Committee chair. And so that's the current version of the bill that the Senate is looking at. It's going to take all 50 senators for this thing to pass, and they're still negotiating it. And there are senators like Senator Manchin who are really pushing on this tax legislation. They have a couple concerns. One, with the Congressional Budget Office, dollar amounts on this thing. And then the other big issue that's being debated under this Build Back Act is the SALT, or the state and local tax deduction cap. It was a $10,000 cap. They want to raise it to $80,000. Cap was supposed to sunset in 2025. And they're talking about pushing it out a little longer, or maybe taking away, that cap after the end of the after 2025 or 2032, I think, has been mentioned on this. So that's the biggest concern. For those of our clients who are concerned about this, the good news is this act had a lot of tax provisions in it that could have raised things like capital gains rates, individual and corporate business tax rates, estate planning, issues and IRA contribution amounts, things like that were contained in that bill. All of the individual rates and the capital gains rates increases were removed from the bill, and some other limitations too that would have been a concern. Most of those are no longer in the text of the bill, and it doesn't look like those kind of things are going to get negotiated back in. So those key provisions entering, those key provisions in this Build Back Better Act, are going to be things like extended child tax credits, earned income tax credits, added child care entitlements, and family leave, paid family leave. There's some climate change spending in there. Tax increases. There's the state and local tax issue that I mentioned. There's also tax increases for large corporations, a 15% tax on large corporations. An excise tax, 1% excise tax on stock buybacks for corporations. These are all things that are probably not going to affect our smaller dental practices. Even the larger dental practices are probably going to fall underneath the limits to where this is going to be have an effect on them. There's surtaxes on modified adjusted gross income. But it's on income from 10 million to 25 million and 8% above 25 million. The one thing that does potentially have an impact is an expansion on the 3.8% surtax on net investment income. They want to include trade and business income, which would also include our sub S corporations. And a lot of our dental practices are subchapter S corporations. And they take that income out of the business. Those distributions are not subject to a 3.8% Medicare payroll tax. If this expansion on the surtax on net investment income is expanded, then that's going to take away what some people call the S corporation loophole. So those are, those.
Or the major.
There's some other minimum distribution rules, backdoor Roth IRA contributions, and things like that are also being discussed. Roth IRA conversions, backdoor Roth IRA conversions may end in 2022. That's one of the things that's under this bill, which may have a big impact on some of our clients as well. Those are where, there are certain income limits that don't allow you to use a Roth IRA feature. And so, to take that away would mean you can't get a Roth IRA. Those are the big issues in that act.
Wow. Well, I know that you are a major contributor to our Advisor Insights newsletter, and I know you'll be bringing our listeners up to date on a regular basis regarding that. And I know we're going to talk a little bit in a subsequent podcast regarding capital gains and ordinary income. I know you're an expert on that also. So, wow, there's a lot of stuff. So, I think this is a great update. Again, we could talk for days on this topic. But I think this is unbelievable. And I know some of the stuff that you're reviewing and looking at and writing about. So, this is major stuff. Well, I think this gives our listeners a really, really good basis moving forward into the new year. Especially what they need to do for this year. Although we got, a week and a half, and I know there's going to be about a week and a half or so, a lot of scurrying activity, and this will keep our guys pretty busy with the CPAs. No, this is great stuff. Again, there's so many moving pieces to this, and I know that you just scratched the surface of the highlights. I would tell you that. So, I tell you, we are. Wow, it's amazing. So we're gonna bring you back on some subsequent podcasts. I know we got a couple more to go, and our listeners are going to be even more informed. So amazing, Danielle. Thank you so much for joining us today. I know you're very busy with year-end stuff and all the tax reviews coming up and the legislature stuff. So, ladies and gentlemen, thank you for joining us.
Thanks, Stuart, for having me.
And then what we'll do is. If you have any questions, concerns, feel free to reach out to us. Number is 770-886-2400. Oberman Law Firm. If you have any questions, please feel free to email myself, Stuart at obermanlaw.com or Danielle at obermanlaw.com. Folks, thanks for joining us, and then have a fantastic day. Talk to you soon.